Shares of Indian Energy Exchange or IEX have fallen sharply in trade today to hit multiple lower circuits on July 24th. This comes after reports that the Central Electricity Regulatory Commission or the CERC has given the green light for market coupling in the day-ahead market. This will start from Jan 2026. This regulatory change could significantly alter how electricity is traded in India. Let's break it down. Under the new framework, all three power exchanges in India, IEX, the Power Exchange of India, and Hindustan Power Exchange, will operate as market coupling operators on a rotational basis. Their role will be to collect, buy and sell orders from across exchanges and discover a single, uniform clearing price for each time block. Currently, each exchange determines its own price separately, which leads to some noticeable price differences across platforms. So why is this important? Well, power exchanges act as digital marketplaces where electricity producers and electricity distributors such as DISCOMs buy and sell power. They help match demand and supply and also determine the price at which electricity will be traded. India's power market operates across various time horizons, from short-term contracts that last less than a year to long-term agreements of up to 25 years. Right now, most power in India, around 87%, is purchased through these long-term power purchase agreements. Only about 7% is traded on exchanges. The day-ahead market, or the DAM, is a physical electricity trading market that allows market participants to buy and sell electricity for the next day. In this segment, or the day-ahead market segment, IEX's dominance is extremely strong with a near 100% market share. Essentially, what this means is that the clearing price determined by IEX becomes the benchmark. However, this dominance has created some issues. The electricity regulator has observed that one exchange, that is IEX, gets enough demand and supply bids to set reliable prices, while the other two exchanges often struggle to match bids. In some cases, even when there are some buy and sell bids, trades don't go through due to thin volumes. This has raised concerns about market concentration and a lack of real competition, which prompted regulators to push for market coupling. With market coupling in place, all exchanges will pool their bids and a common price will be determined and applied across exchanges. Exchanges would then mainly act as platforms for accepting bids but not for price discovery. Proponents of this market coupling model say that this will bring more fairness, eliminate price gaps between exchanges, and lower power procurement costs for DISCOMs. They argue that price variations aren't due to technology, since all the three exchanges use similar algorithms, but because participants fear mismatched prices. This in turn discourages wider participation across exchanges and reinforces IEX's monopoly-like conditions. There's also a financial angle. Deviation settlement charges, which are fees paid when power supply deviates from the schedule, are tied to day-ahead prices. A uniform market price could help reduce arbitrage opportunities and improve pricing transparency. But critics are not convinced. They argue that since IEX already holds a near monopoly in this segment, uniform pricing is practically already in place. They also caution that electricity pricing should reflect variations in fuel costs, technology, and contract terms, which is something that a single uniform price will not be able to capture. Further, with market coupling, IEX will no longer control price discovery, and now smaller exchanges will have access to the same pricing. This could lead to a significant shift in trading volumes towards platforms with lower transaction fees, which in turn will cause IEX's revenue and margins to come very strongly under pressure. This could lead to a shift in trading volumes towards platforms with lower transaction fees, causing IEX's revenue, along with its margins, to come under pressure. This is the main reason behind the crash in the share price today. Still, the push for reforms in India's electricity sector is growing, with power demand rising sharply at a rate of 8.5% from FY21 to FY24 and the share of renewable power also increasing rapidly. Experts have suggested that the need for more efficient and more transparent markets is very clear. The next few years are going to be very crucial in determining whether market coupling can deliver on its promise and whether dominant players like IEX can retain their edge in a more level playing field. Until then, stay tuned to Moneycontrol.com for more news updates.